Hello there, and thank you for joining me in my first installment of what I think will probably be maybe 10 episodes to kind of cover home buying 101. So I'm trying to fashion this information not only to first-time home buyers, but also to move-up buyers and really focusing on the home financing piece. But there's always going to be a little bit of real estate talk in there as well. So let's get started on that. So I really think that probably this first episode should cover the basics of what we look at in order to determine a buyer's uh, credit worthiness, if you will, in the mortgage scene. So it kind of comes back to the old concept of the 3 C's of credit. And if you're as old as I am, you probably learned this in home economics in high school, but I don't think that they do that anymore. So it may be pretty new news to the younger set. So the 3 C's of credit are character, capital, and capacity. So the first of those, character, you might also be able to recharacterize that as credit. So character is a measure of an individual's ability to adhere to the commitment that they make to the lender to repay. So it really is how well you keep your commitments in a credit agreement. So also translates to credit, and that's how we measure character, is with a full pull of all 3 bureaus of your credit score. So we're going to pull Experian, TransUnion, and Equifax, and we're going to take those conglomeration of those scores, take a look at them, make sure that the payment history is square. Take a look in the back history for derogatory credit events like bankruptcy and foreclosure, and see how far back those are, and then assess that credit score and fold that into the mortgage file for underwriting. So that's character. The next one is capital, which also translates into down payment and reserves. And so the amount of the down payment that a borrower brings to a mortgage transaction is going to determine what kind of loan that they qualify for, whether that be a government, a down payment assistance loan, a conventional loan, and then the more that an individual, generally speaking, the more that an individual brings as a percentage of the purchase price in the form of a down payment translates into a better interest rate as well. So capital is very important, and some loans will hinge on reserves and the ability, it's kind of a measure of a borrower's ability to save money. So money that they have in reserve will also strengthen their loan file. Then you have the collateral, and collateral is going to be the property. So we'll assess the value of the property by ordering a professional appraisal, which is a very in-depth dive into the value of a property as compared to similar properties in a similar area that have sold within a similar time frame. And so pretty in-depth evaluation of several properties that provide comparable value and are a good assessment of the overall market value of the home. So we utilize those both in refinances and in purchases, and that's how we assess the collateral piece of it. So the 3 C's of credit, very important. We're going to dive into a few of those more deeply as we go into this. So that's a good introduction. Thank you for joining me for the first segment, and I look forward to seeing you in the next one. Thanks.